Hey everyone, it's Ian, and I am back today with 5 dividend stocks. I want to cover 5 stocks that I truly love. These are stocks that I am buying and holding forever. They are 5 of my favorite dividend stocks. I'm going to cover them in the video today by popular request. But before I get started, I have a question for you. I have a question. What do these 3 things all have to do with dividend investing? I'm talking about these air filters. I am talking about this bar of soap. And I am talking about the wrapper known as Birdman. What do all 3 have to do with dividend investing? Actually, quite a lot. So I'm going to cover that in the video today. And I've gotten this question. Hey, Ian, you've shared with us extensively your top 12 dividend stocks of all time, my ride or die dividend stocks. And it's true. And I'm going to give an update on those in the video today. But I get the question, hey, Ian, you own 46 dividend stocks. We know what your top 12 are, but what are the runners up? What are kind of the next 5 stocks that almost made your top 12 that didn't quite make it? Those are the 5 that I'm talking about in the video today. And so after the video today, you will know my top 17 favorite dividend stocks of all time. Get ready, everyone, for an exciting video. All right, everyone. So in terms of the agenda today, I'm going to start with the 5 stocks, the 5 runners up. These are stocks 13, 14, 15, 16, and 17 of my favorites out of all of the dividend stocks in the world. I'm going to start with those. And then later in the video, I'm going to give a brief update on my top 12 as well. And so let's get started with Raytheon Technologies. I'm going to share it with you on the screen right now. And I want to start with some of the metrics that pertain to Raytheon Technologies. So you'll see that on the screen. And Raytheon Technologies is a defense and aerospace company. This is a company actually that used to be called United Technologies. And what happened is United Technologies spun off Otis and Carrier, and then it merged as well with Raytheon. And so there's 3 entities: Raytheon Technologies, Otis, and Carrier. I own all 3 of them. Raytheon Technologies has made my list, and so it's number 13. It's one of my favorite dividend stocks of all time, and I'm going to get into some of the reasons next as to why I love this company so much. But before I do that, just a few metrics that I want to share with you right now. And so this stock is currently trading at $62 and change. The starting dividend yield right now is 3.04%. I highlight that on the screen here because I feel that that is a compelling dividend yield in the overall market today, where it's very difficult to find world-class companies at reasonable starting dividend yields. It's an expensive stock market right now. The 2020 EPS, earnings per share estimate, is $2.91. And that puts the current PE, or the forward PE this year, at a 21.50. However, if you scroll to the right a little bit here, you'll see the earnings estimate for 2021 jumps up to $3.79. So there's a lot of difference for this company in the earnings this year versus next year. I imagine a lot of that has to do with this global pandemic, because Raytheon Technologies is a defense and aerospace company. And we know right now defense is probably okay because the government is always spending on defense. But the aerospace side of things, it may be hurting because I don't think too many airlines right now are making heavy investments given what's going on. And so the analysts are looking at this company as having a weak year this year, a better year next year. And so check it out on the screen right now. What's so interesting is the forward PE next year dips down to a 16.51. Now, I think there are a lot of assumptions in that, one being that things recover in 2021, that aerospace recovers, airlines recover. But what's so exciting is even if that does not materialize, the 2020 numbers are not bad. It's right now yielding 3%, and that's a payout ratio of only 65%. So even if the earnings do not grow, there is room to grow the dividend. The starting dividend yield is pretty solid. And so one of the reasons that I like Raytheon Technologies right now, quite frankly, and I will be buying more of this company, is I think out of the universe of stocks right now, this one is relatively well priced. I wouldn't say it's on deep discount, but I think it is a reasonable bargain given the quality of the company and given just the landscape out there that in high quality dividend companies, there's not a lot on sale right now. And so I want to share on the screen with you right now some of the reasons I like and I dislike Raytheon Technologies. So check it out. And so with Raytheon Technologies, what I love is United Tech, the kind of parent, if you will, of Raytheon Technologies, the predecessor, if you will. It was my number 4 favorite company of all time. And so it has roots in UTX. That's something I love about it because I really regarded this company highly for so many years. It kind of fell off my list when they decided to spin off some divisions and then merge with Raytheon. There's just a lot going on, and so it was hard for me to evaluate, but it's now back on the list at number 13. I'm really excited that they did successfully pull it off. A lot was going on with the spin-offs, with Raytheon, and they pulled it off. And one of the other things I love, I don't have a lot of kind of pure play exposure to the defense sector. And when I look at my portfolio, especially at my top 17, there's a lot of weighting in basically consumer non-cyclical and especially in consumer packaged goods. There's a lot of weighting there. And that weighting has served me well. It has. And some of these consumer packaged good companies, if you will, are kind of the unsung heroes of this pandemic. They have really shined and done a lot for society during these tough times, and those stocks have benefited. That being said, I like to diversify. I like to have exposure to different sectors, and so it is nice to have a pure play defense company in the portfolio. Now, they don't only sell to governments, they also sell products to airlines as well. And so it's not 100% defense, but this is about as close of a kind of pure play defense as I can find in my portfolio. And so I like that. Now, what are some of the things I dislike about Raytheon Technologies? Well, one of the things I dislike is a lot of the revenue is tied to the government or to governments around the world. And one of the things worth keeping in mind is politics these days are really volatile, and we don't know what the upcoming election in November holds for us in the United States. Things are either going to stay on their current trajectory, which are honestly probably pretty good for a company like Raytheon Technologies, or they could swing in a really different direction. And by going in that different direction, it kind of could be the first domino that hits down a set of dominoes over time that move us to just a different political landscape, one that might not want to invest quite as much money into defense. And if that becomes the case, hey, it could hurt companies like Raytheon Technologies. And so a company like this, a defense company, it's always tied to the government. It's tied to the government strategy, and politics these days, unfortunately, they're just pretty volatile. It's hard to predict what's going to happen. So that's one thing I dislike about it. What else do I dislike about this company? Well, a lot of revenue is tied to aerospace, and we know in 2020, this sure is not a good year for aerospace. I am looking forward to going out in an airplane once again, hopefully sometime soon, and enjoying our world again. But for now, because of the pandemic, aerospace is just not thriving. What else do I dislike about this company? Well, defense can be a controversial sector. I've made peace with the defense sector because I enjoy the benefits that come with defense, and I think there is there's something to be said for protecting someone's way of life. And so I look at it as, hey, I'm not so sure about kind of proactive steps of defense, but defending someone's kind of nation, I think it's important that nations around the world have a basic defense and that they can defend their country, if you will. And so I've made peace with that, but it is a more controversial sector, if you will, when it comes to investing. So let's jump into the number 2 stock today. This is number 14 on my list of stocks. This one is the makers of the soap. And so I asked that question at the beginning of the video. Give a thumbs up, give a shout out, comment below if you like Dove soap as much as I do. This is a product of Unilever. You can see on the back there of the container. And this is the sensitive skin one. I really do appreciate this. It keeps me looking so fly. I got the big bag of all of them here. I don't know, this one comes with 16 bars. So dermatologist approved. Love this stuff. Been using it for a while, and it's for ages. It's good stuff. And so what I love about Unilever, well, I'll get into that in a minute, I guess, but I'll give you a preview. One of the things I love is just the soap. It's in that cosmetics sector, and they're heavy in it. They're heavy in that kind of personal care, beauty, cosmetics, that type of stuff. And everyone wants to look and feel their best, and Unilever makes that possible. And so I love them for that. And so that's part 1 of my answer to the question at the beginning of today's video. But let's keep going. And so I want to share some metrics with you on the screen right now. Check it out. And so what you see right now with Unilever is it's consumer packaged goods company. They sell products, actually, not just beauty, but they sell a lot of food products as well. They own Ben & Jerry's ice cream, for example. Man, that ice cream is so good. So good. And they actually sell some home care products as well. So it's a diversified CPG company. I love that. Big company. And it's trading at $61. Dividend is about $1.88 per year. And so the dividend is coming, again, just in at 3%. 3% in this market for a world-class company like Unilever, I highlight it for a reason. That is something exciting. And it's hard to get good yield in high-quality companies in this market. So I love that about Unilever. What else? Honestly, the estimates here are my own estimates. 2020, I'm just assuming the trailing 12 months, because this is a Dutch-British company. And in the United States, the analysts that follow the company, they don't share their projections on Yahoo Finance, where I typically pull my projections. So instead, I'm pulling trailing 12 months. And on a trailing 12 months basis, Unilever right now has a PE ratio of 24 and payout ratio of 74%. So there's still room to increase the dividend. I just assume, hey, what if they grow the earnings by 5% in 2021? That would put the PE down at about 23. So one of the things about Unilever, I'm going to share it on the screen right now, the things that I like and dislike. Check it out. And so you'll see actually in the dislikes, one of the things that's just challenging with Unilever is it's tough to analyze it because I can't find analyst projections. It's a non-US company. When I analyze non-US companies, oftentimes it's just more difficult to do so. It's more difficult to read the reports. The standardized reports, the annual reports, quarterly reports in the US, I find them really easy to review because I've been doing it my entire life. When it comes to companies outside the US, it's a little bit more difficult to analyze and to project. And so that's something to keep in mind with Unilever. That's one of the main things I don't like about it. The other thing I don't like about it is I just have a lot of exposure to CPG. That being said, CPG, consumer packaged goods, man, has it served me well. It has served me so well. And the reason it served me well, quite frankly, is it served society well. These are the unsung heroes of 2020, and I think they're going to be the unsung heroes far into the future. So what do I love about this company? Check it out right now. What I love is it's a British-Dutch multinational company. It's one thing to be a U.S. company that has a lot of exposure overseas, but it's another thing to be a company based outside of the U.S. that has a lot of exposure overseas. When I look at my top 17 favorite dividend stocks of all time, I have stocks that are based in the U.S., that do a lot of business in the U.S., I have companies that are based in the US that do a lot of business overseas. But I also want to make sure to include a company that is based overseas that does a lot of business overseas. I find that international perspective, the global perspective, very important to my long-term strategy. So that's something I love about Unilever. What else do I love about them? Just the breadth of products, the cosmetics, the food, home care. They've got a good scope of products, and I like that they're heavy kind of on the cosmetics and beauty. Love that stuff. And they provide just everyday essentials that consumers cannot live without. And we've all seen that in 2020. Companies like this have done quite well. And so that's what I think about Unilever. And so next, what I want to get into actually is Honeywell. This one, so I did number 13. I did number 14, which was Unilever. This is number 15. And I want to talk about Honeywell. And Honeywell, I'm going to answer the question from the beginning of the video. They obviously make the air filter. You probably saw that from the get-go. I love Honeywell products. I think it's a great company. It's an industrial company. I feel strongly about the industrial space. I have another big industrial in my top 12. That is 3M. But I wanted to include Honeywell as well in my top 17. And Honeywell is a small position for me. Right now, it's only about 0.14% of my portfolio. And so this is one I am going to build quite a bit. And so I'll tell you as a takeaway, why do I go through all this? Why do I share with you, hey, here's my top 12, here's my top next 5, this and that? The reason I do it is as much for the community as it is for myself. When I own 46 stocks. I'm never going to sell them. I probably will end up buying more. The portfolio keeps getting bigger. But I'm really trying to keep it to 46. But what happens is sometimes it's easy to get lost in that 46. And so I need to prioritize within the 46 if I had to get rid of stocks, like which are the main core ones that I want to keep. The reason I do this exercise is it keeps me focused on what really matters. It keeps me away from the distractions. And what I found through this exercise today is that Honeywell, this is one of these stocks. It kind of got lost in my portfolio. I haven't been buying any. But when I went through this exercise, I'm like, you know what, Ian? That's wrong. This is not an ancillary position. This is going to be a core position for you. And so that's why I do this exercise. But anyways, let's look at a few metrics first on the screen. So check it out. And what you see with Honeywell is the price per share is 175. The starting dividend yield is really low. It's only 2%. The PE this year is a 25. PE next year is a 22. I guess one of the only really exciting things is the payout ratio is a low 54%. Other than that, the metrics, honestly, richly valued company, world-class company. It's not on sale right now, but they do have room to grow that dividend. But surely with a forward PE looking out to 2021 of a 22, it's not on sale right now at all. But why do I love it? Why do I like this company so much? Check it out on the screen right now. So some of the reasons that I love Honeywell, despite it being really new and small to my portfolio, is their products are the best. When I am talking about just the products I've had experience with, whether it be these filters, and these filters are for their air purifier, which we have 2 of running around the clock. We now just run it year round to keep germs out of our house, to also filter the smoke that can come from the California wildfires that now just happens every year, unfortunately. But again, it can filter germs in the world of COVID and pandemic. But also, what I love about these air filters is they get just some of the dust out of the air, so it's less dust that needs to be filtered by my air conditioner or my HVAC system. And so it's just good for that. But also, we have other Honeywell products. We have the humidifiers, and I always use the genuine OEM replacement filters from Honeywell. Really good product. Even our hot water heater has a Honeywell electronics on the front that regulate the water heater's operation. And so I have a lot of experience with Honeywell products, and they are always top notch. I love Honeywell. But what's so interesting about these Honeywell products that you'll see on the screen right now is the products can be ugly. Like their air purifier, It's not the best looking thing out there, but it does the job. It's reliable. It works really well. And so the company still thrives despite the fact that the design of their products isn't always the best, which tells me there's a lot of upside for Honeywell, because imagine if they designed their products looking a little better, looking a little more exciting. Man, they could do even better than they are already. And so that's something that I love about Honeywell. What else do I love about Honeywell? I love that it's an innovative company that places an emphasis on technology. I do not own a lot of technology in my portfolio, especially in my top 17 stocks. I don't have any like pure play tech companies in there. And Honeywell, I look at it as an innovative, technology-minded company. I know they're working on quantum computing, for example. They're involved in the aerospace industry pretty heavily. They're always innovating. And so that's something I like about Honeywell. But quite frankly, what I like about Honeywell quickly turns into what I don't like about Honeywell. So as you can see on the screen right now at the bottom, what I don't like is they're dependent on the aerospace industry. And as we already talked about this, aerospace, we talked about this quite a bit with Raytheon. Aerospace is not necessarily the industry to be in right now in 2020. So that's something to keep in mind with Honeywell. And I guess if I had to put another reason why I don't like them is just it's always expensive. And when the market tanked back in March and April and I was buying like crazy, I kind of regret not picking up some Honeywell. That being said, I had a fixed amount of money at the time and I put it into all of my favorite core 12 stocks. And so I guess I shouldn't have any regrets. But now that we're back here in October, I kind of have a feeling, I don't know if I'm going to get Honeywell on the cheap anymore. We'll see, but I don't think that's going to happen. And so I want to move on now. So I did 13, 14, 15. I want to talk about my number 16 favorite dividend stock of all time. And this is the one where Birdman comes into play. So this is Southern Company. Southern Company is a regulated electric utility, and they provide a lot of the regulated electric utility in Virginia, Tennessee, in Georgia, Illinois as well. And this is a great company, great regulated electric utility. And Southern Company got me thinking about Birdman. When I prepare for a video, for each of my videos here on YouTube, I'm listening to some hip hop music, trying to prepare for it. And it got me thinking about Birdman, because Birdman, by the way, I'll tell you, some people sometimes say, like I was talking about Drake in one of my Facebook posts, and someone said, Ian, you lost me at Drake. And it's like, here's the thing. Drake, I think he's worth $150 million. Birdman, worth $100 million. Don't post a comment like that on my Facebook or on my YouTube unless you have 100 million or more. That's all I'm saying. Is these are very successful music artists, very successful businessmen, entrepreneurs, and there's a lot we can all learn from someone like Birdman or Drake for that matter. But feel free if you're worth 100 million and up, chime in and try to discredit them. But anyways, why I was thinking about Birdman when talking about Southern Company is there's a song by the Big Timers. This is the group he was in when he early on in his game, called Down South. And so I encourage you to go hear the song Down South. It's a Southern it's a celebration of the Southern way of life. And so I really enjoy that song. And what's interesting is also Birdman had an album called Fast Money, but none of his money, I would say, has been fast money. He has been in the game, in the rap game, since 1992. And so he has been at this a long time. And why is he worth 100 million? He is worth it because he has been working hard at it since 1992, which has a lot of parallels, quite frankly, to dividend investing, because dividend investors, no one's getting rich overnight. No one's getting rich in their first decade, quite frankly. It's in future decades with a lot of hard work that it compounds into a snowball. And so that's something to keep in mind. A lot of knowledge from the hip hop industry that affects my dividend investing strategy. Anyways, let's check out some metrics. Check it out on the screen right now. And so what I like about Southern Company is it's yielding 4.21%. Great starting yield, very solid. And the PE is not bad. A forward 2021 PE is coming in at an 18. It's certainly not a steal year, but in the sense of the overall market, it's I don't know, it's a reasonable value. But one of the things I'll tell you that I love the most about this company, this is not a dividend growth stock. I guess it is in the sense that the dividend is growing, but it's not growing very quick. But what is exciting about the dividend is it's stable, it's big, it's a high starting yield, and if I need cash flow tomorrow, I can rest assured, hey, I'm buying some Southern Company, and tomorrow I can start using that cash flow to pay my bills. And I know being a regulated electric utility, there is not a competitor coming in to disrupt them. Surely solar panels and such, yeah, maybe that could be called a competitor. But so far, these regulated electric utilities have done just fine. So I love that about Southern Company. And so check it out on the screen. I want to share a few things. And so one of the things that I like about Southern Company, quite frankly, in addition to be a regulated monopoly, is that I live in California, and this gives me exposure to the South. And so we talked about that with Birdman. I like that. And it provides the stability. It provides that current dividend income. What I don't like about Southern Company, quite frankly, is there's not a lot of growth ahead. It's only going to grow as quickly as they can push through rate increases with the local government agencies. It's only going to grow as quickly as the population in their area grows. And so it's not a fast-growing company. And what I don't like is it's only U.S. exposure. There's no international exposure. And so with a stock like this, it's very centric to certain geographies in the U.S. And so it's kind of like placing your eggs in one basket, if you will. But that's why I diversify, and I own 46 stocks, and 17 of them are my favorite stocks of all time. All right, everyone. So that's Southern Company. I want to round out the list today with a sin stock. And so let's talk about Philip Morris, ticker PM. I was going to include Altria as number 17, but I couldn't do it because it's the pure play US. I see the way things are going potentially with the election, and I don't know how it's going to pan out. But I'm just saying, I love Altria. I'm going to keep buying Altria, but man, the politics of it all is so hard. Being pure play US and just being in a political environment, I would say, that is so polarized, and honestly, it's gotten to just a weird point, just the politics of it all. And so I couldn't choose Altria, but I went ahead and I included Philip Morris. So check it out on the screen right now. Let's talk about this company. Let's talk about some of the metrics. And so with Philip Morris, one of the things that I love about this company right now is that it is trading at $74 and change and has a starting yield of 6.45%. So a generous starting yield. PE this year is expected to be under 15. It's coming in at 14.63. Payout ratio is a little high, but that's good. That's intentional. They don't want money going to anyone but the shareholder. They don't want governments or others trying to come in and take that money. And the PE looking forward to next year is going to be a nice 13. And so I love the metrics behind Philip Morris. Sin stock industry, quite frankly, is one of the industries that has some of the best metrics around. When you just look at the unit economics of it all, the metrics are amazing. That being said, what's interesting with Philip Morris, if you dig into the financials, is the metrics aren't quite as good as Altria, because internationally, this is a pure play international. This is a U.S. company that's based in New York, but all of their business is international. And they do that on purpose to avoid the U.S. government and the U.S. Food and Drug Administration, which otherwise could come down really aggressively on them. And so it's nice that they're pure play international. But anyways, being pure play international, it affects their numbers. And the numbers aren't quite as good as Altria's because internationally, international governments, hit them with these excise taxes big time. And so it just takes a huge haircut right off the top of their margin, but their margins are still great. And so what are some of the things I love about Philip Morris and don't love so much? Check it out on the screen right now. And so one of the things I love about it is it's a pure play international exposure. They've been really innovative. They invented this IQOS product, which is a heated product versus a combustible product. It's done very well in Japan. This is the future of this company, and they innovated that. And so sometimes you think, hey, sleepy old company, not going anywhere. People are using their product less and less. Yes and no. They're being innovative here. They're coming up with new products that delight consumers, that are safer alternatives. And so I like that about this company. Now, here's one of the things I've come to realize in 2020. I've always been an OG Thug Life sin stock investor. It is what I am. For a while there, I was kind of getting away from sin stocks and kind of just thinking spiritually, should I really be in sin stocks? This was before the pandemic, but then the pandemic hit and I just started seeing some of the things that came along with the pandemic. Because a lot of people, I would say, have been opportunists when it's come to this thing. And I just see what's kind of going down out there. And it's given me a newfound appreciation for sin stocks because I've realized sin stocks, they're not the real sin stocks. And so anyways, I'm back on the bandwagon. I love them. More power to them. They're amazing. But what I'm trying to say here is think about the world we live in right now. It's kind of a weird place out there. And I'm just saying this is kind of a simple thing that people, responsible adult consumers, they can enjoy the products that this company sells in an otherwise tumultuous world. And so I think that's something, as with a lot of the stocks I like Unilever as well, they just sell simple thing like ice cream, for example, Ben & Jerry's ice cream. It's just a simple thing, simple pleasure that a responsible consumer can enjoy. Now, is it bad to go out and consume 10 cartons of Ben & Jerry's in one evening and be an irresponsible consumer? Yeah, that would be really bad. And so even that could be considered a sin stock. But what I'm saying is someone who chooses to use the products responsibly, I like consumer packaged goods these days. I like these types of companies because they just allow people to have access to different things in their life during an overall crazy, crazy year. What do I dislike about this company right now? One of the things I dislike is, hey, the industry is facing decline. And so these innovative products like IQOS, they better really flourish because they can only raise prices on their legacy products so much. And they've counteracted a declining industry with pricing so far quite well, but the pricing, it can only do so well. The other thing is the industry is under attack. It just saddens me because I'm a fan of smaller government, letting people make their own decisions. I'm a wise adult consumers, exercising willpower and exercising just moderation. But unfortunately, that's not the world we live in. The world we live in now is a world where the governments and agencies, they want to kind of influence, hey, here's what you ought to be doing. Here's what you not shouldn't be doing. It's the media too. Media's trying to pitch different things. And it's difficult these days for consumers sometimes even to make up their own mind. And so given the world we're in and that it's an industry that's kind of under attack, that's something that worries me. Now, the U.S., it's under attack more than international, but still, it's something to keep on the radar. So that's one thing I don't like about it. What else don't I like about this company right now? Check it out. Excise taxes. We talked about the excise taxes. They are huge. And so that's certainly something that with this type of company, they could go up more and more and more. And that's one way to attack a company like this is for governments just to, hey, say more taxes, tax them all the way out of business. And so that is a possibility. But I'm saying in my top 17 favorite dividend stocks of all time, I had to include an OG Thug Life stock, Thug Life investing on the real. All right, everyone, I'm going to close out today with a quick overview of my top 12 ride or die stocks. This is a refresher for folks that did not see my last video when I did my top 12. I will link to that in the description below, but check it out on the screen right now. And I have these boxes around the ones right now that I think are a reasonable value. Most of these right now are fairly, if not overpriced, but I highlight the metrics on the screen right now that pop out to me, and I put boxes around the ones that I would be comfortable buying here personally, that I think are a reasonable value. I love that J&J is on sale. One of the reasons I think it's on sale right now is because of politics. There's a lot of speculation out there that if the tables turn, if presidential election goes towards the Democrats, what could happen is there could be different regulations around pricing of drugs, and that would affect the types of products that J&J sells. This is why I think this industry is under a little pressure now. But I'm a long-term believer in this industry because they're providing the very products that keep us all healthy, and so that is so important. And it's trading right now. Check it out on the screen at a PE of 16. When I look forward at 2021, this year 18. I'll take it. Payout ratio is only 51% on 2020 projected earnings. Duke, I like right now, just like Southern Company, another regulated electric utility, starting yield 4%, PE not so bad, payout ratio pretty good. I like Kimberly-Clark. I'll probably buy some next week. They just had some earnings. They didn't quite live up to these analyst expectations. Hey, more shares for me. And so it was down a bit, and I will be buying more. I like the fact that it has a starting yield, as you can see on the screen, of 3%. I like the payout ratio is really low at 56%, and I like that PE in the 17s. Hey, company sells paper goods. It's not growing very quickly, but it sure provides products we all need for our daily lives and we cannot live without. So I love that. You can see the rest of the stocks on the screen right now, and just take a minute to check it out. Those are my top 12 favorite dividend stocks of all time. All right, everyone. Thank you so much for watching the video today. This is PPC Ian, Dividend Investing for Everyone. If you like the video, please give it a thumbs up. Please subscribe, put a comment below. Let me know what your top favorite dividend stocks are. These are my top 5 runners up that come right after my top 12 favorite dividend stocks of all time. Share in the comments what you think, what your favorites are, and hopefully I surprised you with a few. I think I probably surprised you with Honeywell and Philip Morris, but let me know if I surprised you with any of the others. Worth noting, I provide all of my best content here for free on YouTube. And I'm proud of that, and I'm so thankful for everyone's support. There are many ways to support this channel just by watching, giving a thumbs up, sharing. I have a Patreon as well. I have the ability now to give a one-time tip. I'll share those all in the pinned comment below. Also, I now have merch as well, as many of you know, custom dividend investing merch that is so cool. Also, I want to let you know, just a update for the community. I can only provide my best content here on YouTube for free, but sometimes I just want to do kind of a quick video and it's not quite up to the standards of what I would feel comfortable posting on YouTube, because I can, as a perfectionist, I can only do my best here on YouTube. And so what I decided to do is also to reward my patrons who are generously sponsoring what I'm doing here. I am uploading some videos on Patreon as well. These are shorter videos. They're not as polished. But look, if you want to get a little bit more of me, consider checking me out on Patreon. I'm sharing those videos there as well, and they're only on Patreon. But again, I am continuing to share all my best content here for free forever on YouTube on The Real. Before I leave today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed investment advisor first. Just sharing my personal journey here on YouTube for fun and entertainment. There's a ton of risk investing in the stock market. In terms of full disclosure, I own all of the stocks mentioned today, and there are a lot of them. So let's get started. I am long Raytheon Technologies, ticker symbol RTX. Unilever, ticker symbol UL. Honeywell, ticker symbol HON. Southern Company, ticker symbol SO. And Philip Morris, ticker symbol PM. I am also long Altria, ticker symbol MO. Carrier, ticker symbol CARR. And Otis, ticker symbol OTIS. Also, I am long Johnson & Johnson, ticker symbol JNJ. PepsiCo, ticker symbol PEP. McDonald's, ticker symbol MCD. Clorox, ticker symbol CLX. Duke, ticker symbol DUK. Procter & Gamble, ticker symbol PG. Don't ask how I got this lying around in the garage. Anyways, got that. What else? Coca-Cola, ticker symbol KO. 3M, ticker symbol MMM. Kimberly-Clark, ticker symbol KMB. Starbucks, ticker symbol SBUX. Home Depot, ticker symbol HD. And Realty Income, ticker symbol O. Honestly, Realty Income, I probably should have put the box around as well. That one's a reasonable value now as well. That's that for today's video. I love you all. I will see you in the next dividend investing video.